Okay. So the trick is that what's going up must come down. So how will you know that now price is going to come down? You should know that. Okay. Yeah. And then as you can see, if price is going up, they say it's on an uptrend.
Yes.
It's going up like this. We are on an uptrend. You see, it's going to go down. But how will you know that now it's going to go down? You see?
So,
Is that
what I probably think, huh?
Yeah.
Yeah, like like you see that at that highest price there, like you can see that those pin bars there, that would be the one reason, you know.
This one?
No, the other previous high.
Yeah.
Yeah.
There's no pin bar there.
It's not a pin bar that one.
No.
Okay.
Okay.
So, but I think when you see a pin bar on that price there, and then maybe it appears on the resistance where you place an order block, that might be two reasons for you to make a sell when the price is gonna go down.
Okay, right. Yeah. The correct answer is this. For you to know that price now it's no longer going to go up. It's going to turn and go down. There is something we call change of structure. And change of structure, man, is the only thing that I'm always using. Like if you can master how to identify that change of structure, you see, you'll be 90% correct all the time. Okay. So you have to master how to identify the change of structure.
All right.
Look at this trade that is on the screen. That sell that I took there, it was based on change of structure.
All right.
Not only, remember the confluences, not only the change of structure. There are so many reasons there. Like if you say we have confluences, at least have 3 or more confluences. Okay. Have 3 or more confluences. Okay. So what's going up must come down. You have to know when will price now come down. Okay. And then we'll use change of structure in order to see that. Okay. Another thing that will be, you will use this rule that says, it's simple, it's the second rule. It's going to say, after every breakout, there should be a retracement. Price should retest that level. Okay. Before it continue going up or down. Let's say for an example, let's say this is your resistance, price is running here. After it breaks that, this is your breakout here. Okay. Price should go back to test this before it continue going up. Simple as that. This is your resistance, your support. Price is there. Break here. It should go back before it continue going down. These rules, man, are simple. If you can master that, very, very simple.
Okay.
I understand. But the change of structure now, the change of structure, it should have this, like the trend line. Okay.
So the change of structure is spotted when you draw a trend line.
Yeah, you have to identify the trend line. Remember, if we have like 3 bounces, now the third rule says the price will always turn where it turned before. If you see market stop, if you see price stopping somewhere, it stopped there before. If you see price turned here, it turned there before. We don't care how long. It can be last year, it can be last week, it can be in 2004, it can be in 1999, 1998, but it turned there before. Okay. You understand?
I get you, my man.
Look, okay. I understand. Yeah. Okay, we can try to prove it. Let's just drop a line here and see if we can have somewhere where it turned before. Can you see? It turned here before, it turned there before, it turned there before, it turned here, this side before. Can you see that, right?
There are multiple bounces on that.
Yeah. See, Even if we go back like this, let me just see this. Look at this level. Remember, is the area of support and resistance. It's not like on the same line. Remember, we draw them differently. Some will draw them on the where the candlestick close. Some will draw them on the peak of the candlestick. So we draw them differently. Hence, we're saying is the area of support and resistance. It's not like only one line. It's the area. Even if price turned here, you see here, it might still be on the same level as this one. Okay. Yeah. So you have to be careful of that. We're going to be use more of that when we do what? When we do entries and exit. You see, there is something we call golden entries and exit. Sometimes you can place your take profit here. For an example, let's say here, it's your take profit. If you see someone placing a take profit here, doesn't know how to trade. That guy doesn't know how to trade. A take profit, because this is the area of support. You place your support here. You can't place your
at least a little bit. At least try to be above now.
Where I placed it there. You see, because price might still do this. Price will go from there. Will go like let me just say from here will go like down. Pass your take profit. Already you hit the take profit before it turn and go back. Imagine if price turned here. Your take profit is there. Price turned there before it can turn there and go back. I see. At least put it a little bit inside. Okay.
Yeah.
Yeah. Another thing that I like about this is that you should know where to hide your stop loss. The same rule that we are using for take profit, we'll use it on how to hide your stop losses.
So I can see it's above. But if you go to the maybe like H3, I will be able to see where you spotted that stop loss. It's above the higher.
No. Remember this one we just put it now here for when we are
I'm talking about this one you're taking on a live trade.
Yeah. Okay. What about it?
So like,
you said it's doing what?
Like if you go to lower time frame, I'll be able to see like you put it above the higher price of nearer where you entered. Like maybe you see when you enter on a pin bar, you place your stop loss above the highest price of that.
Yeah. Let's say for an example, my stop loss for this one was here about this level. I don't touch this candlestick. I don't touch this candlestick. You see, you don't have to touch this candlestick. And then already this pair it's running. This trade is running on like 40 pips. Okay, 40 points of profit. Okay. Yeah. So that's why I moved my stop loss from here to somewhere there. So now we call it what? We call it a free trade. Whether it's coming back to hit the stop loss or it's doing whatever, we're not gonna. We know we are not losing anything. It's a lose. We're no longer counting this trade. You see. Let's say if you don't want to avoid like over trading and stuff, the margin calls and stuff, you have to lock some of the trades. Already this trade went like 40 pips in profit. We only locked where? We only locked like from here to here, which is like
maybe you can lock only 10 pips.
Yeah, only 10 pips. Yeah, as you can see here, I locked only 14 pips. You'll only lock that. Okay. And then like from here, from that 14 pips, from there to your stop loss to that is 29 pips. You still give the market like a space to breathe. See? Yeah. So even if on this one, it's against the rule to log it now. It should give you a swing. I'll teach you how to do that before where you can log it properly. Okay. It should give you a swing where to log it properly.
All right.
Yeah. Okay. We're on change of structure. Okay. So we're still on the rules, okay? Okay, so yeah, what's going up must come down. Yes, explain that, you know that, right? You should know when you should know when it's gonna go down, where you'll be using the change of structure. Okay, after every breakout, price will retest. Once you identify like the change of structure, once you identify the breakout, whether it breaks support or resistance, price should go back and test, especially on higher time frame. Price respect support and resistance on higher time frames. If you see price break daily time frame, if you see price break daily resistance or support, it should come back to that level before it continue doing whatever it's doing. If it breaks up, it should go back before it continue going up. If it breaks support, it should go back up before it continue going down. So it's going to give you like a lot of entry. So if you see price breaking daily resistance, you know where it's going to stop. It's going to stop on the nearest daily resistance. The nearest daily resistance. And from that daily resistance to the next one, let's say it's 500 pips, right? Already it went up 500 pips. Yeah, let's say it went 500 pips from your daily resistance. It went up 500 pips. It stopped exactly on the nearest resistance, where is 500 pips. So it's still going to go down 500 pips before it continue going up. You know that, right? On that resistance, you'll wait for market to do what? You'll wait for candlesticks pattern to confirm that now we are going down to retest that previous resistance, that can support. And so
you use,
we can't let that 500 pips, just like we can't leave that 500 pips because it's a retracement. We'll do what? We'll go to lower time frame to do what? To get the sell entry going down to that retracement.
So yeah, short-term sells.
Yeah, the short-term sells. That's when we're going to be using the ABC retracement. We combine ABCD strategy with the ABC retracement. See, so that's another day story. Okay, we leave it like that. Okay, but it's very simple. So, like for an example, man, like I said, different traders will draw them differently. Let me just try to give you an example of if price is going up, will come down. Okay, what I will do, I'll just place a line like that. Let's say, for an example, we had nothing this side. This side, there is nothing, just plain, okay? Look, price break here, it was going up. How do you know that now it's going to go down? Let's break out here.
Because it's going to turn where it turned before.
Here is where it turned before. On back and test. You sell it there. Look at this bearish pin bar. Bearish pin bar is like this. Long tail. Oh, come on. I can't draw with the mouse, but I'll try. Long tail, small body. And a nose. So this candlestick here means like, it doesn't mean change of direction. It's rejecting higher prices. So price was going up. So if you see this candlestick is no longer going to go up. It's now rejecting higher prices. It means now the bears are taking over from the bulls. Okay. And another thing, if you see this candlestick is the confluence. Another confluence is this change of structure. After every breakout, price should go back and test before it continue going down.
Okay.
So you're selling.
So can I ask something? Well, like usually I see you sometimes confluence with 61.8.
Yeah, sometimes confluence with 61.8. Remember first thing that I told you when we start here. I said, sometimes you go into a trade when using this form of what? Failure of missing out. Okay, let me just give you an example of this one. If you pull your Fibo from here to the, wait for it.
It doesn't hit 61.8, you can check.
Wait. Wait, we're on it. Okay. Yeah, it didn't hit 61.8, but it did what? It hit the trend line. And it also gave you like a bearish pin bar before it can reach 61.8. I don't even understand why you say it didn't hit 61.8. Every retracement should retrace between 50 and 61.8. That's the rule of Fibonacci. As long as it can touch in between 50 and 61.8, you can just take it. Let's say, for an example, you went in here with a sell on your 50. If price is still going up to 61.8, you don't have to panic there because it's still going to turn here at 61.8. Sometimes you'll find out that, okay, let me just do this. Let me see if I can grow this one. Sometimes you'll find out that price was going up like this. Okay. Let's say here it was your support, the resistance that 10 support, and then it break there. It went all the way to 10 there to retest. Okay. And then your 61.8 is here. You go in with a sell, right? If price still continue, if it went down in profit and then went up to that level, go there. Don't panic. It's still going to work. To test what?
That's that support
that previous support, that 10 resistance. Okay, so don't panic. Just put like that. If when it comes, I usually go in again here. So I'll have two entries. The first one here, the second one here. Okay, so I'll go in again there for price to go down. And remember, I have my change of structure there. I don't know how to do. I can't use this thing, but that's your change of structure because it breaks support and also the trend line. Okay. Yeah. So don't panic when price goes still. You should know where is it going. You can panic if you don't know, if you don't have anything to back up your entry or why you went in early or something. That's when you can panic.
Okay.
Right. But
right,
we'll be together all the time. Like, don't be scared to ask any question. Like, even before you enter the trade. Yeah.
All right.
Yeah. Okay.
Yeah, I'm with you, Machi.
Yeah. So how many rules do you have there now?
Now we've added like now we have the trend line, we have the Fibonacci and the candlestick. We have 3 rules. On this particular trade now, you are showing me on this.
No, like I'm not. I mean, don't worry. Everything the candlesticks got their own rules separately. The change of structure. I mean, the one thing that if you've noticed, I've been using one strategy over and over again. You see, so after every breakout, price what's going up must come down. After every break, price will always 10 before. That's the rules. So this is the reason that I'm saying, okay, look at this trade now. Why do you think market will stop from here? Where we think it's going to stop is it's where it stopped before, which is this level. See, that's why we're placing our take profit there. Okay.
Okay.
Yeah.
Yeah, like if it continues to go down, it might stop on that lowest price on this chart. You see that down there.
Yeah. Another one.
Or am I wrong?
So no, you're not wrong. So if we break here, we're going to that level there. Okay.
All right.
So from here, there is another. This one here, it's support, right? But it's not as strong as this one here. You'll see why I'm saying this one is not strong as this one here. When we do what? When we do like the ABCD, because on using the ABCD strategy, the AB should be equal to CD. So if this is your AB, your CD will be this one. So AB should be equal to CD. You just cut and paste, but you're using support and smart way. I understand. So if we say here, should be this one, AB, this one will AB, and then this one will be your CD. If you say AB is equal to CD, this one should be approximately equals to this one.
That other one.
So you take profit, it means you take profit. This will act as our first take profit. This will act as what? Our second take profit. So if it happens that when price reached this level here, it went back to retest that one, that went back to retest this. This was gonna be our next entry, and then we get out there. Okay. So this is how we do, like when we do like after every breakout, we're still based on those rules. Price should go back and retest. So if we see price has been stopping there on this area here for quite some time. If you can see, even this side, see, for a long time. So if it breaks, it happens that it's going back to test. We get excited because we're gonna get another entry going down. Okay.
All right.
Nice one. Okay. So, like I said, today is just the introduction, and then to introduce you to the rules, introduce you to the MT4. Another thing that I can just add, do you know anything about pending orders?
I haven't tried any pending orders.
Okay.
Like what I understand is that it's placing an order at a place where the price haven't reached it yet.
Yeah, but you have to understand how it works, right? How many pending orders do you have?
Yeah, you have to know where.
Yeah, how many pending orders do you have?
You place your orders on support and resistance, right?
Yeah, but you have to, even if you do that, you have to know why you're saying price will turn there. You can't just say anticipate that price will fail to break without having any confluences. No. A lot of people lose money because of this. Man. They just say we sell at the resistance, we buy at support. You see? Yeah. I mean, you can't risk your money for 40 pips. No, I can't risk my money for 40 pips. If price now move from here to that level there, it's gonna go up and retest here. Let's say from here to there, it's 40 pips. I can't risk my money here for 40 pips. I'd rather wait for the price to reach this level, patiently wait for price to reach this level, and then I will sell it going down to this level there. You see? So that's where patience comes in. By patient, if you say you have to have patience, it doesn't only mean you should hold a losing or a winning trade. You should also wait for the right moment to enter the price, to enter the market. Okay. If it didn't reach the level where you should sell or buy, don't sell or don't buy. Okay. Yeah.
All right.
Okay. Something like that. So H4 going up, it's higher time frame. H1 going down is lower time. You can even analyze the market on 15 minutes and get your entries on 5 minutes. Remember, 15 minutes is stronger than 5 minutes. You see, daily is stronger than H4. You see.
Okay.
But mostly we'll be doing analysis on H4, getting the entries on H1 or on 30 minutes, because we want to trade like just like that, something like that. Yeah, and then we don't have like favorite pairs and stuff, but we know that gold, silver, Euro USD, Nasdaq, Pound USD, there's a lot of money there. Palladium, SP 500, but we trade everything as long as it got the candlestick. See.
Now, as long as it gives us the
as long as you see something, just trade it. And another, you should another thing you should do, you should know that is the correlations. You see, that's the most important one, the correlations. If you see that gold is going to have strength, let's say gold is going to be bullish, USD Swiss franc should be bearish. So it's not easy. When you say do analysis, you cannot just only analyze one pair. There is something we call correlations. There's something we call weakness against strength. Let's say gold, it gives you that, okay, from here I'm gonna turn and go up. USD Swiss franc should give you that from here I'm gonna go turn and go down. So
yeah, like some of those ones, it's not the first time coming across them in my ears. So like maybe when you say Euro AUD is gonna give us the same results as Euro USD and then Euro JPY, because they correlate. I don't know if I'm right.
Yeah, they should correlate, man. They correlate, like, yeah, you should, like, we do that to identify whether, to see if we are right when you say gold is gonna go up. See, another thing is weakness against strength. It's very much important. You can't say AUD is gonna be stronger than GBP and then leave everything like that. So you should at least see if AUD have another strength on the other pairs. On the other pairs as well.
Yes. I get your point.
See, yeah. So if you let's say you take three pairs. Let's say you take three AUD pairs. You see, like, AUD is gonna be strong. You see, yeah. And then let's say, okay, let me just give you like a simple example. Let's say it's USD ZAR, it's Euro USD, it's USD JPY, it's a USD pound USD. So on these four pairs, you see that the dollar is gonna be weak. You see, and then on two pairs, another two pairs that you analyze, so you see that the dollar is gonna be strong. Which one are we gonna go with? We're gonna go with this four. Okay, yeah. But sometimes you're gonna get lucky. You can get, like, I don't say if it's lucky, maybe, I don't know what you can call it, but you will find out that, okay, overall the dollar is gonna be strong. Because on all those pairs you analyze based on dollar, you see a strong dollar. So that's when you will hear people breaking on Facebook that dollar is gonna be stronger. But they won't explain to you how did they say, why do they say that? But it's based on weakness against strength. If you didn't know about that.
Okay. Yeah, that was the first time hearing about that one.
Yeah. See, if someone says dollar is going to be strong, the overall dollar is going to be strong, it means you analyze the, like, weakness, used weakness against strength. You see, you find out that on many pairs, dollar is going to be strong. It looks like it's going to be strong. Remember, it's a technical analysis, right? And I don't trade like fundamentals, because I believe that technicals, fundamentals follow technicals. You see, if I say, okay, on 61.8 I'm selling, and then price pass that 61.8 on technical, past 61.8, I believe that it's still going to come back to that level. If I say it's going to reject, it's going to get rejected at the resistance, and then it passed that level there, I don't count that move. For me, it's a fake move based on the fundamentals. So it's eventually it's going to follow those. The technicals work. So we'll be doing a lot of technical analysis, and then the fundamentals we just learn, like, maybe like there and there. See, but sometimes the fundamentals also change our structure. Let me just give you an example.
Like I hear they play a lot, they have an effect as well.
Yeah. So let's say if this is support and resistance, if price is doing this, how will you trade?
I only buy on the support, and then, but again with Confluences, as you said.
Yeah, you should have confidence. You cannot just say when price reach this level here, you buy. When it reaches this one, you sell. You should have confidence. At least when it reaches this level here, you look for bullish engulfing candles, bullish pin bars for you to buy it going up. Yeah, But
yeah, and I think the market will also along those downtrends within that area there. The market, I think, will also do those breakouts and retest what
look,
on the trend line, but on lower time frames.
if price do this, no one can tell where price is gonna go. Okay, unless it breaks and go back and test. Now we are confirming that it's gonna go down. Yeah. Okay.
But when we see if it does not break and then we see a bullish pin bar, then we know, then we anticipate a buy.
Yeah. Remember, man, you'll see that when we do like the candlesticks patterns, you see.
Okay.
Sometimes it's gonna give you like a significant engulfing candle here. You see, if it gives you a significant engulfing candle, it means there is chances that it's gonna break going down, because this is a strong sell signal here. Okay.
So it means that sell signal from that support can even break the from that resistance. Sorry, from that resistance, it can even come and bring down the support.
Yeah, because it's strong one. That's why you should know the strongest one, the candlestick which are strong and the one that are not, the one that are weak. The confluences will be two. First one will be resistant. The second one will be candlestick. That candlestick is significant one. It's a very strong. It's a very strong one. So there is too many chances that it's going to break that support and continue going down. That's when you'll keep your take profit open. That's when you can put your take profit open here. You just remove it. You don't place your take profit here. But you have to monitor that trade. Okay.
Yeah.
Yeah. Okay.
Okay, Bruce, man.
Yeah.
So like what I'm trying to say is, like, you see that move before that significant engulfing candle there, the one you just drew here.
Yeah. Okay.
So like on lower time frames, maybe let's say you analyze that on H4, but maybe on 30 minutes, it's gonna try to give you like the breakout, that trend line breakout structure, you know, somewhere, somehow. Or am I wrong?
No. Remember, here we are doing what? Here I'm giving you an example on a flat channel. Right?
Okay.
This thing here, it's a flat channel. Yeah. It's a flat. I'm giving you this example on a flat channel. So a flat channel is just consolidating in a flat. It is okay. It's consolidating in a flat channel. You see, it's not going up. It's not going either up or down. It's consolidating on a flat channel. The best signal to get is either it breaks high or low. But it doesn't mean you don't have to trade. You're trading. That's when you'll use what? Support and resistance and the candlesticks patterns. Not only support and resistance. Don't just say, okay, it's gonna bounce on that. It's gonna bounce on that support and continue going, and then turn and go up. It's not gonna get rejected on the resistance and go down. No. Wait for the confluences. If it doesn't give you a candlestick, say that's saying to you that you should buy or you should sell. Don't enter that trade. Wait for the breakout. We'll see.
I get you.
Yeah. Man, this thing, like, it's so enjoyable. It's so easy because even every candlestick got its own retracement. Every candlestick got its own retracement. I can just, let me see if I can get anything. Oh my God, where am I? Okay. Every candlestick got its own retracement. Like, let's say, let me just try to draw it because I can't see anything. Let's say this is one candlestick there, a bullish. Okay, let's just say it's a bearish because it's a red. So this is the open, right? This is the close.
This is the close.
Yeah. Right. Let's say it opened there and then it closed there. So the next candlestick that open is gonna open here and then close there if it does. So this tail going there, the retracement here. You see, if you pull your Fibo from this one candlestick from there to there, this is your 61.8.
Okay.
Okay.
So it wanna like you see it can be on a weekly chart. This is what you have drawn there. It can be on a weekly chart, but on
okay,
H4.
let's not go to a weekly chart. Let's go to let's say this happened on a daily. You know what's gonna what's gonna look like on an H1, on an H4.
Like this move that we are seeing now on this time, on this live trade you took. You see this one here, the one you showed me, like it's A, B, and C, D. On this live trade you are taking now. I think it's gonna look like this one. Exactly.
You might find out all this level here, all this on higher time frame is engulfing, and then this
it's an engulfing candle.
It's a one candle retracing what? That one candle on higher time frame. So your entry will be here, obviously. Okay. So if this one candle going down, let me just try to draw it nicely. If this one candle going down, it's on weekly, like this. Okay. The next candle that opened here, even if it went down, it has to retrace at least half of that candle. So this from here going there, it might be from here going there, and then from here going there is from here going there. So your sell will be here. So you can't pull Fibonacci on one candle. Remember, you go to lower time frame and then you'll find this, and then you pull your Fibo from here to there, and then you're 61.8. You're selling.
Okay.
I can do that. You can pull Fibo from here to there, 61.8. You sell, and then this will be your profit.
Okay, Mr. Bruce.
Yeah. So it's cool. We are done for today, and then tomorrow we're ready, man. If we can you make my life easy if you get home early.
Yeah, I knock off around 3:30.
Yeah, it means we'll connect. But anytime I'll wait until 5:30.
Mara, anytime around after that, around 3:30, I think you can hook me up whenever time you are ready. Unless I tell you something that I'm
okay, cool. Thank you very much, my man. We'll talk again tomorrow, then I'll continue again tomorrow. This meeting was recorded. I'm not sure if you need it. If you need it, I'll send it to you or I'll email it to you.
I need everything we do, say. I'm gonna need everything. Cool.
Just send me on WhatsApp. You can just on Instagram, on Telegram, sorry. You can send me your email and then I'll email it to you. And then
right.
So we'll do it again tomorrow. Thank you very much, my man. Sure.
Thank you, Mr. Bruce.
Olada.
Away.